What up, Hyperchange? Welcome to another episode. Today we're going to be talking about Apple and the company's recent rise to $1 trillion market capitalization and why I believe the company could indeed be headed for a $2 trillion valuation in the next couple of years, potentially even hitting $500 per share. So a ton of, speculation and headlines have been made about who would be the first company to hit this $1 trillion valuation mark. Would it be Amazon? Would it be Apple? Would it be Google? But on the back of their last earnings, Apple surpassed about $210 per share, valuing it over $1 trillion. And so now they're the first company to hit that milestone. But in the grand picture, in the bigger scheme of things, I really just don't think this matters at all. It's an arbitrary milestone. In fact, I think almost all the major tech companies are all going to hit this $1 trillion market capitalization milestone in the next couple of years, but Apple just happened to be the first one. But if we take a look at Apple's business, despite them being the most valuable public company on the planet with, over $1 trillion, it still looks incredibly cheap. If you take a look at the company's financials, Apple has consistently, grown revenue over the long term, been incredibly profitable. And as you can see, if we take a look at what they're doing in fiscal 18, Apple's a little bit funny in that their fiscal year ends in September. So fiscal 18 ends in this next quarter, September 2018. So the first 3 quarters of this year, you can see that Apple has grown both revenue and profits, 15% growth in revenue, about 14% growth in operating earnings. So Apple, despite being a massive company, hundreds of billions of dollars in revenue, is still able to post growth rates in the double digits, which I think is really impressive. If I extrapolate what I'm expecting for the fiscal 18 year that ends in just a month or two here, it's about $264 billion in revenue, which would be an all-time record for the company, and about $70 billion in operating earnings, which would be almost close to a record. They actually did $71 billion in fiscal 15 though. So if we take a look at the valuation based on these financials, what Apple's about to do with 4.9 billion shares outstanding at 218 per share as I make this video, that's a market cap of 1.07 trillion divided by 264 billion in sales. We're looking at only a 4.1 times price sales ratio, 1.07 trillion divided by 7 billion in operating earnings. We're looking at a 15 times price EBIT ratio. So Apple, despite hitting these all-time highs, is only valued at 15 times earnings. The entire stock market is trading for more than 15 times operating income. So Apple is valued cheaper than the stock market, despite what I think is an incredibly high-quality business that is setting up for growth for years to come. And part of the reason I think Apple's been discounted is a couple factors. First, it's just so big that people just assume that it can't get bigger. It's just the law of large numbers. So I think that's part of it. The second thing is here, their growth has been slowing in recent years, but once again, that's just because they're so big. But over the next few years, I believe Apple is transitioning from just selling you, hardware products like the iPhone into more of a services business. This could increase the overall margins of the company, and I think have the market view them as more of a recurring business model and increase their valuation in the long term. So that is super exciting, and that's a business you're getting for just 15 times earnings. So now let's break down the business and see what you're actually buying when you buy Apple. As you can see, Apple breaks down their revenue from about 5 different components here. We have the iPhone in the gray, which is by far Apple's biggest revenue driver, responsible for well over half the company's revenue. So I think that's another reason maybe Apple's, sort of cheap on an earnings basis, because the market thinks of it as just sort of a one-hit wonder, one-product company, which in some ways they are. And, iMac and iPad revenue there in the purple and blue have stayed pretty flat and consistent throughout the past, 5 or 6 years. But that orange line right there, services, has been a huge bright spot in the company, and that is the new revenue line that everybody is focused on. That's things like the App Store and Apple Pay and things like that. We'll get into it more in a second. But first, I want to talk about the iPhone, because this is, more than 50% of the company's revenue and profits. This is the backbone of Apple. And as you can see, their units sold of the iPhone, which I think is really fascinating, peaked in around fiscal 15 with 231 million units. And in fiscal 18, I'm expecting them to sell about 218 million units, almost exactly flat from the prior year. Now, you may be worried about that, but look at this chart. Revenue from the iPhone program continues to increase and will be a record in fiscal 18, despite unit sales not being a record. And that's because Apple's average selling price for the iPhone continues to climb with the iPhone X. And this is a concept that Scott Galloway has talked a lot about, and that I think is really important, is to view Apple as sort of more and more of a luxury player. That's sort of how they're trying to pivot themselves as a company. The tech in their products isn't actually that much better than what you could get in a Google or Samsung, but the brand value of owning an Apple product product is so off the charts that it is able to command a huge premium and profit margin, and that is the direction Apple is headed over the long term. And this is the data that's backing that up. As unit sales stay flat, Apple's growing its iPhone revenue at about 15 or 20% just because they're charging more and making more per phone. But the other thing that has Wall Street super excited is services. So, this combination of App Store revenue, Apple Pay, the iCloud, iTunes, Apple Music, basically software, type sales that Apple's making on top of its platform of hardware devices is an incredibly high margin, recurring, lucrative aspect of the iOS ecosystem that is now emerging as potentially a huge revenue and profit driver in the long term. So as you can see, service revenue has sort of accelerated its growth pretty dramatically in just the last couple of years. It looks like it's going to be about $38 billion in fiscal 18. That's growth of about 27% for a huge revenue line. This is what has Wall Street so excited, is Apple's transition to being more of a services company. Now, adding this all together, how do I get to a valuation of $2 trillion for Apple, and why do I think the company could hit $500 per share? Let's extrapolate some revenue for a couple of years. If I assume that service revenue continues to grow strongly into the future, hitting $74 billion in 2021, then with iPhone revenue, I assume that it continues to grow at about 15% per year until 2021. This is continually on the back of that trend of higher model phones, even though I think unit sales growth of the iPhone is going to be pretty muted. If they can keep ramping those ASPs, I think the iPhone program can continue to grow much like it is this year. Adding that all up and assuming that all of the other revenue in Apple, iPad, Mac, other products, which includes AirPods and the watch, stays flat at $64 billion, which I think it's going to be in fiscal 18, just assuming that growth in iPhone and services revenue, here's what I get for Apple's overall projected financials throughout 2021. As you can see, revenue scales from $264 billion to $384 billion, earnings scale from $70 billion to $113 billion, and it's super important to note that I have Apple's operating margin bottoming out in fiscal 18 at about 26.5% operating profit, and then climbing to 27.5%, then 28%, and 29% throughout the remaining of this model. So basically increasing their operating margin by 1% or 100 basis points every year from here on out, because services is going to become a bigger and bigger piece of their business. I just think Apple's model will get more and more profitable. So that is the financials picture. So that is the financial picture that I'm expecting to unfold until fiscal 21. Now, there's another component before we drill down into the valuation. Apple has $147 billion in net cash on its balance sheet, and they're doing a massive share buyback. Now, one important point I want to make about cash. Although Apple's overall cash balance is around $250 billion, they have about $100 billion in debt they took out against that. So that leaves me with about $147 billion in net cash for Apple, and they're doing a massive share buyback. So this is one thing that I find fascinating about Apple that not enough people are focusing on, is they've been actively reducing their share count like crazy. Basically what this means is they're buying their own shares in the open market and retiring them so that there's less shares in the pie outstanding. So therefore your value of the company Apple is actually going up each quarter as the total amount of shares goes down, but your holdings stay flat. So Apple, as you can see, over the past 6 years has dramatically reduced their share count from 6.6 billion to 4.9 billion. In my model, I have them continuing to buy back a significant amount of shares, which they've guided they will do, and reducing the share count to about 4 billion in fiscal 2021. So now let's all add this up and get to a fiscal 2021 valuation for Apple. With 4 billion shares outstanding, a price of $500 per share would be equal to a $2 trillion market cap. So this is what's so fascinating about Apple's buyback here. On just a quick side note, is that as they're buying back shares, you could see your equity investment in Apple, what your shares are worth, more than double from about 218 today to 500 in just 3 years if this scenario plays out. Meanwhile, the market capitalization or value of Apple as a whole less than doubles from about 1.07 trillion to 2 trillion, and that is all because they're buying back so much stock and your share of the pie is increasing. So I think that's a huge tail at your back when you're buying Apple stock. But anyway, so 4 billion shares times 500 equals a $2 trillion market cap. 2 trillion divided by 384 billion in fiscal 18 revenue, we're getting to 5.2 times price sales, a slightly higher multiple because once again, they're more of a services company, higher margin now, and 2 trillion divided by 113 billion in my expectation for 2021 EBIT or operating income, and we're looking at a 17.7 times price EBIT ratio, even at a value of 2 trillion in just 3 years. So this is the math of why I think Apple, with just a slight increase in its earnings multiple and strong growth from iPhone and services, could easily become become a $2 trillion plus company in 3 years. So we may just be getting started on Apple's run here, and that is what's so fascinating. Now, I want to talk about what could be next for Apple, because there's so much speculation about, what will disrupt the iPhone. It's been here, and it's been this main staple product that's been, sold, incredibly popular, is the way we interact with the internet for now almost over a decade. And so, what will be the next paradigm of how we interact with the internet? Will it be augmented reality glasses, or will it be, the future of cars and the connected car? I view those as sort of the two next big paradigm shifting products that Apple could be working on. So in terms of the glasses, this is always something that I thought Snapchat has actually been ahead of the curve in. What they're doing with their Spectacles product, which is basically sort of a smartphone camera but built into sunglasses, is I think something of what Apple's potential eyeglasses products will look like. And Apple has filed a bunch of patents, around a potential eyeglasses product. And so I've always thought on the back burner that, Apple is probably working on some smart glasses product with heavily, implementing augmented reality features. And that could be one product eventually that you may not need your iPhone if you can wear glasses and, interact with Siri through voice and do everything you would do on your iPhone with this, smart glasses ecosystem. That's, another mini moonshot here is I think Apple could buy a company like Warby Parker that specializes in glasses and prescriptions. They have a cool consumer brand and integrate the tech into their brand that way. That's just one idea. Anyway, the next big thing that I think Apple is working on is potentially Project Titan, a car. And this is something there's been a ton of rumors about Apple working on. I mean, even Steve Jobs once said that Apple would be working on a car. So it's always been rumored, but eventually, more recently, it looked like they were hitting stumbling blocks. It was harder than expected. There's some speculation now about whether they'll just build the software for the connected car, or they will actually come out with their own car, and build the hardware here. But more recently, I think what has really, really validated that Apple is working on this is, first of all, I had Gene Munster on the Hyperchange podcast, and he said that this is one area of Apple that he thinks is going to be really important to their future that they're working on. And the number two thing is they just hired Doug Fields away from Tesla, who is their VP of manufacturing, who was previously at Apple but then left Tesla to help the Model 3 program. To see Apple poach him again is really strong hint that I think they are still working on a car. So in terms of the long-term growth opportunities for Apple, I think the car and the glasses are there. And then one more thing that I would like to mention is the HomePod. And although this has been sort of a flop, I think it's super important to note that voice represents a huge threat to Apple, and they need to be a first mover here, because if you think about it, Alexa has really taken its place and become that smart speaker in everybody's home. And why that's so dangerous to Apple is because now you're doing things that you would have done on your iPhone via Alexa instead. So if you're saying, Alexa, order me an Uber, that's an interaction that's not happening on the Uber app that Apple would be getting a service revenue cut of that's now happening on the Alexa ecosystem. So that brings me, I think the HomePod, and I think, some product in voice is going to be super important for Apple on their next product roadmap as well. But now this takes me to the risks of investing in Apple, and the two biggest risks I see on the horizon for Apple are Amazon and Tesla. And so the reason that Amazon is a risk is, like I just said, the Echo, or the Amazon Echo and what they're doing with Alexa is taking interactions away from the iOS ecosystem. I think Amazon could pivot that into another attempt at launching a smartphone, which they've tried to do in the past. But I think generally Amazon's presence here as a clear first mover in voice is very, very dangerous for Apple. They missed the boat on that with Siri. They're way behind even Google now, who I would also consider a pretty big competitor. And then Tesla, I think, is a really big competitor for Apple in, not that they could destroy Apple's business in the very near term at all, but I think in terms of how you think about the future of these digital companies competing, if Tesla owns the car, that real estate that they have in the Model 3, that massive touchscreen iPad-like device is going to control a lot of your interactions with the digital world as cars become autonomous, and potentially a lot of those interactions would be things you could be doing normally in your smartphone on a car when you're in an Uber or Lyft, but now you're going to be doing via the hardware or screen on the car. So in the long term, as cars become autonomous, as Tesla owns the time we spend in their cars, I think they will actually be sort of competing with Apple in a weird way. And there's even this weird theory that once Tesla becomes the future of the connected car, they could leverage that tech into some sort of smartphone-esque device as well. So that's a crazy moonshot that's on the back burner too, but those are the biggest risks I see for Apple. The other thing is maybe a cooler smartphone comes out. I don't know. I just feel like it's hard to predict what will happen next in tech, but we're clearly seems like a little bit overdue for that next paradigm shift of what's after the smartphone. And if, Apple gets left in the dust there, the iPhone is more than half the revenue, that would be a huge huge hit to the company. So those are what I see as the risk. But overall, Apple is an incredibly solid brand. They're incredibly profitable. They have a track record of executing. They build beautiful products. I just got this brand new iPhone 10. Huge shout out to our Patreon producer, Dave Rand, for hooking it up. But this is just, I don't know, I love it. It's an amazing product. Facial recognition, like it's a staple of my daily life. I just think Apple is doing an incredible job at building great products. The way they're migrating into a timeless luxury brand, less of a tech company, I think is really smart for their profit margins. So super bullish on the company. My long-term 3-year price target for Hyperchange is $500, $2 trillion. You heard it here first, although I do think Amazon will likely hit a $2 trillion valuation before them, but that's for another episode. Anyway, if you like Hyperchange, definitely check out our Patreon page and consider supporting there. Huge shout out to all of our current Patreon supporters. Thank you so much. Anyway, would love to know what you guys think in the comments below. Are you bullish, bearish, Apple? What you think my price target's crazy? Is my model looking right? Anyway, let me know. I'll see you guys next time. Peace.